In this video, we will learn about the circular flow of income. So it is a basic relationship or a diagram that shows us how different goods and services or money is exchanged between different sectors of economy, how it moves from one sector to another sector. To start this model, we let's see at some of the major sectors in an economy. So first we have household sector. Households are the owners of factors of production that are used to produce goods. Okay, like land, labor, capital are the factor of production. So households owns the factor of production. Now they provide factor services to the firm. Okay, and in return to those services they receive income, wages or salaries in return of their factor services that households provides to firms. And the income they receive from the firm, they spend this income on the goods and services which are produced by the firms. Second sector in an economy is the firms. Firms here include both private and government owned enterprises that are involved in the process of production. So firms hire factors of production to undertake production of goods and services, and these factors of production are provided by the household sector to firms. Then after the production, the firm sells that output and generate income by selling the product that they have produced. And the income that is earned by the firm is paid to the factor of production as the return to their services. After firms, we have the government sector. Now, government here is the general government of the economy. Okay, government earns taxes, receives taxes from the households and firms in different forms, different types of taxes that they receive from these two sectors. Now, government spends money on provision of services that improve welfare services that government provides to their people, and profit is not an objective of government. Fourth sector that we consider in an economy is the rest of the world, that is the external world, other economies, other countries. Okay, so domestic economy undertakes transactions with the external economy in form of imports and exports. So what we produce we export, and what we need we import from other countries. So these are the four major sectors in an economy: household sector, firms, government, and rest of the world. Now let's look at the circular flow of income and what it means. So production is the process of generating the products, producing the product using some inputs. So production is undertaken by the firms. Okay, so it is the generation of income within a production unit or a firm. A firm is a production unit. Then the income is generated by the firms, as we just discussed, that they produce goods and sell them to generate income. Okay, and this income is then distributed to the factor of production, the labor, the household sector. Okay, then the household that receives that income spends that income on the goods produced by the firm. Okay, so income is generated from the firm as production and then is distributed to factor of production, and then same household sector spends all that income to buy the for goods produced by the firm. So the income that started from the firm is again reached to firm. So it is moving in a circular flow. Okay, so this is the circular flow of income. Income is generated by the firms with the help of production, and then same income is sent to the household sector as a return to factor services, and then household sector spends that same income in buying the goods and services from the firm. So the income is returned to the firm. So this is how money is flowing, starting from the firm, ending to the firm. So here is a simple two sector model of circular flow of income. In this two sector model, we are only considering the household sector that is providing the factor services, and the firms that are using that factor services to produce the goods and then selling the goods to the household sector. So in this, we can see we have two parallel pictures or two parallel systems going on. First, we have a factor market and we have a product market. This is factor market and this is a product market. Factor market is where the factor services are exchanged. The demand and supply for labor occurs in the factor market, and demand and supply for the goods occurs in the product market. So here we can see that households are providing the factor services to the firms, and in return they are getting factor payment. Okay, So factor services are flowing from household to firms, and money factor payments is flowing from firm to household. Now let's look at the other side of this same model. We have product market here. Okay, in product market, the goods and services are flowing from firms to household. Households are purchasing the goods and services, creating the demand for the goods and services. So goods and services are flowing from firm to households, and in return to those goods and services, household is paying money to the firms. So household is earning from the firms by providing factor services and spending on the firms by buying the goods and services produced by the firm. So this is product market where the goods and services are exchanged between firms and household sector. Firms are selling the goods and services, households are consuming them. So consumption expenditure by households on the goods produced by the firms. So this is the simple two sector circular flow income model. Now in this, as we just saw, there are two types of flows that are taking place in this two sector model. First is the money flow. Money flow in the form of income and the expenditure. Okay, income that household is getting for their services and expenditure that household is doing on goods and services. So that is the flow of money, the flow of currency. Real flow refers to the flow of goods and services and the factor services. So goods and services are flowing from firms to households, and factor services, the labor, land, these are flowing from household to firms. So real flows and money flow, these are two types of flows that are going on in the same model. Money flow involves the flow of currency. Real flow involves the flow of goods and services, including the factor services. Now this two sector model can be further extended to include financial sectors, the banks. Okay, so as in the previous model, we saw that household was spending all the income in buying the goods and services from the firm, but this is not the actual case. Actually, people do save also. Savings are called leakages from this circular flow of income. The money is leaked from the circular flow. Some of the money is not spent by the household. Okay, it is saved. Now in this variation of the model, we have financial sector. So the money that is saved by the household is deposited into the banks or the financial institutions, and the financial institutions act as an intermediary that helps to channel those savings to firms for investment. Okay, firms need money for investment, so they go to banks or to take loans. Now bank uses the savings of the households to extend the loans to firms. So this is the role of financial sector in this model. They act as an intermediary. The leakages in the form of the saving is again injected back into the circular flow in the form of investment. Now we add government sector also into the model. In real economies, we do have governments, and all the money of the household is not spent on consumption. The money that is spent on consumption is that what is left after paying the taxes and all. Okay, this is called personal disposable income. Personal disposable income is the income that is left with the household after paying the taxes. So government takes the tax from households. Okay, so these taxes are also leakages from the circular flow, and these leakages are injected back into the circular flow with the help of subsidies that government provides to firm for production. So government is taking money from household in form of taxes, providing subsidies to the firms for production. And government also take taxes from the firms. Okay, there are taxes that are put on the firms also. So these taxes are transferred to the household in form of charities by government. There are transfer payments. Transfer payments are single-sided payment that government do to the needy people in return of nothing. Okay, so transfer payments are kind of charities that government do. So this is how government sector is added to the circular flow of income. Government takes taxes from firms and household and channelize those funds back into the economy in form of subsidies and transfer payments. Now we further include this rest of the world, the external economies, into our model, and in this, households not only purchase domestic goods, they also buy imported goods from other countries also. So they put some of their consumption into those goods, expend some of their income on those goods, like on imports, on importing the goods from the rest of the world. And also the rest of the world pays firms in our domestic economy for exports. The goods that we export, we get money for that. The firms in our country get money for the goods they produce and export to rest of the world. Okay, so this is how income is flowing between rest of the world and our economy. Okay, households are spending on the imported goods and buying from rest of the world. Rest of the world is spending money on our goods and buying from us. So import and exports are included in this model in this way. Okay, so these are further some leakages and injections from the circular flow that take place with the help of the rest of the world, through rest of the world. Okay, so this was the role of external economies into the circular flow. So we saw a simple two-sector model where we only had household and the firms. There was no saving. All the income that was earned by the household with the help of factor services was spent on the goods and services bought from the firms. Then we included financial sector. Financial sector, the role of savings. When household saves income, they deposit it to banks. Then banks use those savings to channelize the funds to firms in form of investment. Then the role of government. Government collects taxes from household and firms and then channelize those funds back into the economy in the form of subsidies and transfer payments. The rest of the world, here we include the model, the import and export into our model. Okay, household demand goods from the rest of the world, so they are spending on the goods of rest of the world. So these are the leakages, and injection is the exports, that rest of the world is injecting money into our economy in form of exports. So this is the summary of the leakages and the injections that were taking place in our model. Okay, so initially there were no leakages, no financial sector, nothing, only two sectors. Then we included financial sectors. Savings were the leakages, investment was the injection into the economy. Then we had government sector. Taxes were the leakages from the circular flow, and subsidies and transfer payments were the injection into the circular flow. Then we included rest of the world, the external economy. So imports were the leakages from the circular flow and exports were the injection back into the circular flow of our economy. So the circular flow model is a macroeconomic presentation of the transfer of goods and services and money between different sectors of an economy. Hope you understood this model, and in case you have any doubt, you can ask in the comments. Do subscribe to the channel and do like the video, and do consider sharing it with